In the last 2-3 days, we've been reading in papers about mismanagement at a large mutual fund house. But these papers did not name the fund house or what has happened. Today, a TV channel ran a story saying that 2 fund managers at Axis Mutual Fund have been replaced and have been asked to go on leave. Through the day, several other media houses, including ThePrint, followed on the story and found that 2 fund managers, Viresh, Joshi and Deepak Agrawal, have been removed from managing the assets of the 7 equity schemes at Axis Mutual Fund for alleged violations of the SEBI rules as they were involved in front-running of stocks. According to various reports, on the evening of 4th of May, Bloomberg IDs of these 2 traders and fund managers were suspended. Joshi is the head trader and the fund manager of Axis Mutual Fund, while Agrawal is an equity research analyst. The matter has now reached the doorsteps of the stock market regulator Securities and Exchange Board of India, or SEBI, which is probing the alleged wrongdoings of the 2 fund managers of Axis Mutual Fund, which manages investments worth 2.59 lakh crore. While the story is developing, as the stock market regulator probes the issue, we explain on what this illegal practice of front-running is. Front-running or tailgating is illegal practice where an individual or a broker gets advance information regarding a big transaction due to be executed in a particular stock, and before that trade is executed, the broker invests in that stock through a personal account, anticipating the likely price movement. Let's understand this with the help of an example. Let's say that a broker gets a large order of buying 500,000 shares of a particular company which are trading at 100 rupees per share. But before executing that order, the broker buys 20,000 shares of the same company in his personal capacity. Once the broker executes the large trade, the price of the share goes up by 2 rupees, 102 rupees, and the broker sells this share to generate a profit. The term front-running originated from the time of paper trading. Individuals inside a dealing room would hand-carry papers which would have clients' orders to execute those trades to the main desk, but a broker could literally run to reach the main desk and execute his own personal account order immediately before a large client order, hence calling it tailgating the client's order. So what is the punishment for such an offence? The SEBI, under the prohibition of fraudulent and unfair trade practices relating to Securities Markets Regulation 2003, says that any individual who indulges in fraudulent and unfair trade practices shall be liable with penalty which may extend to 25 crore rupees or 3 times the profits made out of such practices, whichever is higher. Section 24 of the SEBI Act empowers the market regulator to initiate criminal proceedings in court against any person who indulges in unfair trade practices. This is Shubham Batra for ThePrint. For more such stories and explainers, do follow us on our YouTube channel and other social media platforms.